Phoenix real estate market is seeing a number much like we saw in 2007, which is not a year that any of us want to revisit as it relates to real estate. Nevertheless, this is where we are. So we're going to talk about that. We also have some additional information about lowest record of home sales and some stale listings. So, all great news, right? If you're a seller, not the greatest news. If you're a buyer, it might be good news. So let's get into it. First of all, number of listings under contract. This is effectively our demand. It's the amount of buyers that are out there willing to spend the money to buy a seller's home, make a deal, and get under contract. And this number is pretty low. So today, we're standing at about 8,238. That's the number of listings under contract we've seen last week, or week 23 of the year. So most recent data that we have. Now, this black line or dark blue line is 2007, sitting in the high 6,000s. So yes, there is a difference. However, this is the lowest number we've seen since 2007. If you watch me go back every year here, you'll see every single line is above this, some quite a bit higher than that teal line. And if we go all the way back to 2011, you'll see that this week of the year in 2011, we were at 21,476 listings under contract. So just for context, you can see how low we really are in number of listings under contract. This is a very slow market right now. Very few homes are going under contract and selling as compared to the past, especially the recent past when things have been much more fast-paced and many more homes selling. So why does this matter? Well, I don't think that our market conditions are the same as 2007. However, it's really showing this dampening of our buyer demand. And what happens when sellers are trying to sell their homes and no one is buying them and they're not getting under contract? Well, they decide to offer credits or lower their prices eventually. They also may offer some incentives for different types of financing, and I'm going to mention that a little bit later. But what we're seeing today is reflective of 2007, which is not ideal. Like I mentioned, there's a few other things that we have for news this week. Lowest number of sales on record and that kind of thing. So we'll get into that in a bit. But last week, what happened? We had a busy week as it relates to rates and the economy. So the CPI came out, and inflation slows in May with consumer prices up 3.3% from a year ago. The consumer price index held flat in May, though it increased 3.3% from a year ago. Both numbers were 0.1 percentage point below market expectations. It was generally good news. That was great to see that we had some progress in inflation. And so markets did react favorably to that. So we're seeing inflation getting closer to the Fed's target of 2%. And the Fed met last week. And basically, they said they're not ready to cut rates yet. Not a huge surprise. And here are a few things that they said. They said it's too soon to tell if Fed policy is sufficiently restrictive. They also said no one on the Fed committee has rate hikes in their base case. So they're not sure they're going to cut yet or when they will cut, but they aren't planning on hiking. So that's good news. The Fed does not yet have the confidence to lower rates, and they do project one rate cut. They just don't know exactly when. The economy has made progress towards both Fed goals, Powell said, and they predict one rate cut this year. The central bank kept its key interest rate unchanged at a range of 5.25% to 5.5%, but took two rate cuts off the table for this year. So keep in mind, the federal funds rate is not the mortgage interest rate, but as I always say, the mortgage rate does respond to this commentary and what is going on with the Fed and the economy. So last week, mortgage rates did move a little bit. They went down a little bit. This is the latest from last Friday. They said today saw the average conventional 30-year rate rise ever so slightly, and most lenders are still quoting those scenarios just under 7%. So if we look at where we're at with rates today, this is Monday, we're about 7.04%. still hovering over 7, but it was great to see that after the CPI and the Fed meeting, rates didn't go up. They at least moved a little bit downwards, maybe went back up towards the end of the week, but we didn't see a big change in rates. So I said we've been hitting some other records as well, which aren't the best news for sellers. So home sales fell to one of the lowest levels on record in May. Home sales fell 1.7% month over month in May on a seasonally adjusted basis and dropped 2.9% from a year earlier. There have been just 2 months in the past decade with fewer home sales, which was October of 2023. That's when mortgage rates jumped to like 8%. And then May of 2020, when the onset of the pandemic brought the housing market to a halt. So not looking great, the number of home sales. So we talked about the number of listings under contract, which obviously precedes the number of home sales, right? And so knowing that our number of listings under contract is so low, likely we're going to continue to see this number of home sales go down. Again, this is from Redfin looking across the country, but we will likely see that same trend in Phoenix. So number of home sales are low, number of listings under contract are low. Therefore, the number of listings on the market are high and getting stale, according to Redfin. More than 3 in 5 home listings are now stale as record high costs dampen demand. More homes are sitting on the market for at least 30 days without going under contract as home buying demand falters in the face of housing costs. And this is accurate for Phoenix as well. I'm about to show you days on market locally, and we can see what that trend looks like. They're saying more than 3 in 5 homes that were on the market in May had been listed for at least 30 days without going under contract. That's up 60% 1 year earlier, and 50% 2 years earlier. Now, you may wonder why 2 years ago it's only up 50% versus the 60. Well, just about 2 years ago is right when mortgage rates started to go up and homes began sitting on the market for longer. That's really when like the big shift took place in our market and things slowed down from the years of the pandemic. So we're only, up 50% from 2 years ago and 60% from a year earlier. Now, if all of this information is helpful for you, feel free to share it with someone who might also find it helpful. And we would love if you'd subscribe and be part of our community going forward. So let's look at Phoenix and the number of days on market. We'll see that we're at 28 days on market. Now, this is across all of Phoenix Metro. If you look at particular zip codes or particular cities, these numbers are a little bit different. However, across Phoenix Metro, we're about 28 days on market. And I can tell you that this is a really challenging thing for many sellers to accept because we haven't had to experience this for quite a few years. And when you are sitting on the market for 30 days or more before you get an offer, you do start to wonder, is my price too high? Is the condition of my house not great? What is it about my home that buyers aren't interested in? And the bottom line is, it's just price usually because of how expensive it is for a buyer to take on a mortgage today. They are very picky and they want things perfect. They want things turnkey and they don't want to do a lot of repairs. And mind you, when you do get an offer, you are likely going to get an offer with at least 2% seller concessions being requested. That's just the environment that we're in today. So if you're listed on the market, keep positive. It just takes some time to sell a house. I think we've all forgotten that it does not sell overnight. We've been conditioned otherwise for a few years, but that's just not realistic. Now, there are some things that you might be able to consider doing a little bit different. One thing we're doing on one of our listings is offering seller financing. So buyers, I'm talking to you too, you may be able to find a listing with seller financing. If you're not familiar with what that is, That means that basically the seller becomes the lender and you can get a much more favorable interest rate, and the loan is structured a little bit differently, usually shorter term, but all of that is negotiable. So for buyers, if you want to find homes that are offering seller financing, check the description. I have a link where you can take a look at that. And sellers, if you have questions about that, feel free to reach out to me directly and I can help give you some more information on how that works. Now let's look at our active listings. This number has been elevated over the last few weeks. It looks like it's been going down slightly, but it's not really a big change compared to what we've, week over week. We're sitting at about 17,000 active listings on the market right now. I know you guys have been enjoying seeing this every week, so I'm going to try to continue to share the number of active listings. Now, if we look at the Cromford Market Index, as we do every week, we're sitting at 104.4. Anything between 90 to 110 is considered a balanced market. Supply is at 74.5, so that's 26% below normal. Demand is at 77, so that's 23% below normal. Demand and supply are getting closer together, which is putting us in a balanced market. Now, every city behaves a little bit differently, and we're seeing a lot of red arrows this week. So all of these red arrows are showing a move away from a seller's market for those cities, and all the green arrows are showing a move towards a seller's market. Now, with all of these, the average change month over month is negative 3.4%. Last week, it was negative 2.1%. So we are seeing more momentum away from a seller's market and towards a buyer's market. Now, some of these cities are very far from a buyer's market, like Phoenix all the way up to Chandler. And then we've got a few cities that are in a balanced market, Goodyear, Cave Creek, and then some in a buyer's market, Surprise, Queen Creek, Maricopa, and Buckeye. All in all, the market is really softening right now. Typically in the summer, sales do slow down. Buyer demand slows down a little bit. Listings can sit longer. Our inventory can go up a little bit. But we're seeing that in conjunction with rates and prices dampening buyer demand. So it will be interesting to see how this summer goes if we continue to see some deterioration of our sellers market across the board. I've also been sharing the contract ratio because this is really helpful to see another perspective of the heat in the market. This is the map of the Phoenix metro area. The contract ratio compares the number of listings available for sale to the number of listings that are already under contract. And anything that is like 30 to 60 is considered a balanced and warm market. 60 to 80 is hot. 80 to 100 is hotter, according to the Cromford report. And we have a few zip codes that are in that hotter area, like some of the South Phoenix area, Tolleson, Levine, Chandler. Gilbert used to be a little bit warmer. We can see that's cooled off a bit. A few zip codes of Gilbert are still in that like hot area. And then we've got a lot of green and blue, which is all of the balanced and warm markets. So overall, you can see things have really cooled off. So what do we do in this market? It is a little bit slower, and that is okay. If you're a buyer, you can take advantage of this if you're able to afford a house with the mortgage and the prices that we're at today. And if you can't, look into some options of seller financing. Like I said, I have a link below where you can see all of the homes available for sale with seller financing options. And sellers, just be patient and keep in mind that it takes some time to sell a house. Check the description for my buyer and seller resources, and I'll see you guys next week on my next market update.